Even as the liquidity squeeze starts, a breakout still remains possible. Following on from analysis last week, Bitcoin remains within this downward price channel, generally considered a bull flag, and at the top end of this long-term falling wedge that we can see here, and both of these patterns are considered bullish, generally preceding a breakout in price. Over the weekend, we saw an uptick and then a retrace, and if we continue down to this trend line at the bottom, we expect to intersect about here, and we can see that this price point with the line drawn across has been significant support previously during this cycle. Also at support is the RVI, relative volume. So whilst we have very low volume overall in the market, we do want to see that at least the volume, the small amount of volume that we have, is bullish. And so staying above this support and bouncing towards the upper end of the relative volume index would be a good indication of that. As we've addressed the initial stages of the debt ceiling deal that came in at the back end of last week are probably going to be rough on risk assets. This is principally why we can see that US Treasuries from 1 month to 1 year are offering yields of over 5%. So it's very difficult to compete with a very low risk investment that is offering yields that high. We've got a bearish midterm economy. Again, we can see that although we're anticipating to have an interest rate pause in June, with a 78.2% chance that we remain at 500 to 525 basis points. The pause is seen as being short-term for the Fed, allowing them to gather more data, and chances are that we're going to see continued rate hikes during Q3 as inflation really needs to get back under control. One thing that is bullish and coming from Glassnode is this chart showing the continued increase in the number of Bitcoin wallets, even wallets holding small amounts. We're not just seeing whales accumulate in this market, we're seeing all types of investors accumulate. So this is all wallet addresses with balances equal to or above 0.1 Bitcoin. And we can see that even during this period where we saw a huge decrease in price, we saw an equal increase in the number of wallets holding that amount. Indeed, we've got about 4.3 million in total wallets now holding Bitcoin in the amount 0.1. This is what provides the support. This is what generates these bullish formations, even as the economy is moving against us. So I'm remaining bullish. However, there's also the reality, and the reality is that we could, equally get a breakdown. Personally, I'm not concerned about breaking this trend line or support. We can go all the way down to the trend line on the bottom of the falling wedge, really, before we see any kind of breakdown. We would remain bullish up until this point. However, my focus would be on the moving averages. I want to see price remain in an uptrend, therefore remain above the 20-week and 50-week moving average, which crossed last week as we highlighted. So I want to see us stay above there. If you've got a midterm long open in Bitcoin, maybe consider putting your stop loss under those moving averages, because I think if they fall, then we're probably likely to come all the way down to about 25,000. Any questions, drop them down below. Join us on the Discord. It's completely free. You can ask us any questions there, as well as get access to all our alt trades, which is really what we do most of the time. Thank you. Bye.